Very good afternoon and welcome to HYCM's webinar, FX Week Ahead, looking forward into the coming week. Now, I hope everybody is doing well. I'm just going to give folks a moment to come in, and as folks are coming into the webinar, just to be aware that the whole purpose of this webinar is to show people how someone from a professional trading background goes about analysing the markets as we look as to what's coming ahead for the coming week. A very good afternoon to you if you're joining us, particularly for the first time. It's very nice to have you on board, as well as the regular faces. Good to have you here. Now, looking at the week ahead, we have a potentially very busy week coming up. There's a lot of potential news that's due to come out, so we should expect a lot of trading reaction to the number of different impacting events, both scheduled and unscheduled. Now, the first thing to say is we've seen the market this week start in a risk-on footing, and that's been despite the COVID-19 cases rising. So the key thing to be aware of here is there was a report by the pharmaceutical company Gilead, which said that the study on their remdesivir in a retrospective study showed a 62% reduction in mortality, and around 3/4 of patients recovered by the 14th day. Now, in normal healthcare settings, without the application of remdesivir, there is a 59% recovery of patients. So this was taken as positive news from the market, and obviously the news that less people are potentially dying and that this is now seen as a potentially effective treatment for COVID-19 gave the market confidence. That's why we saw some risk-on tones coming in on Friday, and those risk-on tones have started the week. If I just go over to the other screen, just having a look here, you can see the equity futures markets have been trading higher. You can see NASDAQ making fresh highs for the day, and a number of the future markets, DAX, S&P 500 towards the high of the day, Euro stocks highs of the day. Looking at bond yields, we can see that bond yields have been trending higher on the day, so that's another positive marker for risk sentiment. And commodities, we've seen copper moving above the ADR high of the day, just falling back to the R1 daily pivot point for now. We've also seen oil prices pressured to the upside on the day, although remember, the fact that OPEC are meeting this week and may dial back some of the production cuts has meant that we saw oil being sold off at the end of last week. So taking the equity markets and the markets as a whole, this risk-on sentiment has maintained. That's why this morning I was looking at buying the Australian US dollar from any drops in support, and looking at the dollar index. I just put on the Telegram channel that we run here at HYCM. I'll just show you that we were looking at selling the dollar index from that key resistance point. I'll just show you the post that I made here. Let's just see if this will come across. Hang on, I just need to shrink that a little bit. You can see here, we're just looking at selling the dollar index. Selling the dollar index from any return back into that 96.70 region, so 96.65, 96.70 regions, and I gave my reasons for that on the day. So if anyone did go short there, the obvious place to be looking at taking profit is down here into this S1 support zone. So that 65.70 region, expected to find sellers on the risk-on sentiment. The dollar has been operating as a safe haven currency, so with the dollar weakening is what you'd expect on the risk-on currency. That's why it was a sell on the rallies this morning. So well done if you got in on that, and the profit-taking area is just here at the S1 zone. Obviously, if risk tone changes, that would invalidate this outlook. So if we went to a risk-off footing, that outlook would be invalid. The Aussie US dollar upside we're expecting, we've got the same risk on tones. Aussie upside, high beta currency, tends to appreciate in value, and US dollar is weakening on the risk on tone. So any return back down to this pivot point can be considered For longs, if the Aussie US dollar breaks up out of that daily ascending trend line, a clear break and then a retest of that level could be a suitable area for going long on as well. So that's something just to be aware of on the Aussie US dollar chart. Going back to our main screen, we just seen those the reasons for the risk on sentiment. A repeated thing we'll be seeing over and over again is Mondays have been risk on. So look out for turnaround Tuesday. Look out for tomorrow. If this risk on tone carries on all day, first of all, look out for tomorrow potentially changing, the market going risk off. And secondly, be aware that risk sentiment constantly changes at the moment. It's risk on in the morning, risk off in the afternoon, or risk off in the morning and risk on in the afternoon. So just be aware we're in a very, very flip-flopping market. Here's the way to look at risk on and risk off trading. In a risk on market, we see the VIX foot lower, stocks rallying. I showed you that in the futures markets. Commodities rising, had copper prices rising. Oil wasn't as rising as much as you'd normally expect because of that OPEC news. We had bond yields rising. Falling bond prices equals a rising bond yield. The charts I've shown you are rising yields. So let me just show you there. If you're looking to do this for yourself, let's get the right screen this time, screen 2. If you're looking to do this for yourself, just go into TradingView and you just type in the name of the country and then the year of yields you want to see. So these are 10-year yields. That's the German Bunds. This is UK gilts. And so when you have yields rising like they are now, that's a good indication that risk could be turning on. So that's why we've got those bond yields rising in the current risk on environment. And when we have a risk on market, then we expect high beta currencies generally to strengthen, like the Aussie, CAD, New Zealand dollar, and safe haven currencies weaken, like the yen, Swiss franc, and at the moment US dollar. Now, we chose Aussie US dollar longs as a preference today because CAD is so closely connected with oil, and with there being negative drivers for oil at the moment, with the OPEC plus potential production cuts being removed in the next meeting, that's a negative for CAD. And New Zealand dollar has some pressure on it today after the investment bank ANZ out of New Zealand said that the RBNZ will want to keep all options on the table to stop the New Zealand dollar gaining in strength. A strong New Zealand dollar, as we've seen over the last few weeks, is bad for a New Zealand export market. So as a result, this strength in the New Zealand dollar is potentially tempered if the central bank is going to come in and use policy tools to keep the New Zealand dollar weak. So that's why we favour the Aussie US dollar longs in this current risk on market. So that's the situation that we're currently at. Now, some big events to keep our eye out on the week ahead. So I'm going to get us ready for those. Now, the first thing to be aware of is that we've got earnings season starting. And there are some considerable unknowns. Now, the first thing to say is about 1/3 of S&P 500 companies have withdrawn their full year guidance. And 4/5 have given no guidance over the last 3 months. So these are the major earnings that are due out, starting this week with PepsiCo today, and on Thursday we've got Netflix, which obviously would have anticipated to have done very well, one of the lockdown stocks and one of the stocks in the NASDAQ. So the market is going to be looking at these earnings to give a good sense of risk sentiment. The market is expecting obviously a big earnings drop. So the big focus will be, what are companies expecting to bring in terms of earnings in the future? Do they give end of year earnings? Do they give the next quarter forecasts? How many companies do? These are all sorts of questions that market's going to be answering. Many unknowns. People aren't sure how companies have been doing. How bad has the downturn been? There is a large drop in income that's obviously anticipated, but the big question is how bad is it, and how hard are these companies going to be hit? So earnings season starting. So throughout everything that happens through this week, be aware that those earnings seasons are in play and have the capacity to alter risk sentiment. So look out for that starting today and through all of the week into August. So that's something to be very, very aware of and very conscious of as we go into the week. Now, let's start looking at some of the scheduled events that we have on the calendar. Now, we're starting off with Bank of England's Bailey. Now, here we see Bank of England's Governor Bailey speaking at 4:30 UK time. Now, the big issue, there's a couple of things to notice on the pound. First of all, the pound itself is at a very interesting place. So here's something to look out for. You see the descending trend line on the daily chart. The blue line is the 200 moving average. So we can see that the pound is finding resistance at this overhead perspective. Now, the pound is bearish until Brexit is sorted. The Brexit deal is still to be arranged. So we're expecting sellers on the pound, expecting sellers on retracements. Now, the pound has put in a very interesting technical pattern. It's put in what's called a triple top. You can see here, this is a triple top with one peak, one trough, second peak, second trough, third peak, and then we've a pullback from that third peak. So now we see this is a triple top on the daily chart. And this is a very well-known and traded technical pattern. It's a reversal signal. So in order to see a reversal signal, you want to see empty chart to the left-hand side. You can see there's space there. It's reversal. And the way it's traded, two ways. One, traders will enter on the break of this 1.2566 level. If that breaks below 1.2566, I put it a little bit lower, just look at that pivot point, you would expect a move lower. Now, if the market does break, technicians will be targeting the whole size of that pattern. So that pattern from the first peak from the first trough to the peak is around 100 points. You can see the bottom here, 1.2568, the peak 1.2668 roughly. So it's about 100 points. So traders will be targeting 1.2567, 1.2467. So around that 1.246 region, any drop down there is what will be the target. And you'll find traders enter this technical pattern two ways. One, some of them enter on a break of this second trough. So you can see that this is the first trough, this is the second trough. Now they're quite a long way apart from each other. So some traders will enter on the break of this second trough in anticipation of this falling. Now at the moment, the pound is supported by the weak dollar. We've got weak dollar on the risk on flows. You can see here, dollar's been weak today. And that's supporting pound US dollar upside. We also had some fiscal stimulus news. Rishi Sunak, the UK finance minister, known as the Chancellor of the Exchequer in the UK, he said that there's going to be post-Brexit tax cuts. And there's additional infrastructure planned out of Kent in the UK. That's the southeast port of the UK. It's a very key area for the UK in order to access foreign markets. So there's going to be a big spending program there to stop any bottlenecks come Brexit. So that's been supported for the pound. But this is the whole significance. Some technical traders have entered on the break of that second peak. If we get, as this afternoon, we have Bank of England's Governor Bailey speaking. If he says anything about the potential of negative interest rates, if he's very dovish, that has the potential to for the pound to sell. So if we see two things, if we see a risk tone that turns off, then that will result in dollar strength and we'll see pound US dollar downside. Two, if we have Bank of England's Governor Bailey mentioning anything about negative interest rates, that will be negative for the pound, and we expect negative selling. So in that instance, some traders will just enter at market, stops above the high, targeting that 100-point move, about 1.2467 target. So that's something to be looking out for the pound. Bank of England Governor Bailey speaking later in an otherwise very quiet calendar. Now, coming on Tuesday, got GDP data out for UK, will obviously be of interest. Got trade balance for China, again, we'll be interested. Remember, China makes around 15% of the world's GDP. It's a big driver for growth, second largest economy in the world behind the US. So China data out this week will be eyed carefully to get some indication of the slowdown or otherwise, or how quickly the market is recovering. CPI data not necessarily that important at the moment out of the US. Wednesday, have the Bank of Japan outlook report and their monetary policy statement. Now, the Bank of Japan have downgraded their latest assessment for all 9 of Japan's economic regions. And this is leaving markets in very little doubt that it's just going to be very downbeat. So there's also been a recent resurgence in COVID-19 cases in Tokyo. So that's going to really, dampen any optimism out of Bank of Japan. So it's expected to be a negative report. The only thing to remember is that this is not really relevant for the yen at the moment. The yen is mainly trading on risk-on or risk-off flows. So it's something to be aware of. But at the moment, the yen is trading, when market's optimistic, we see yen weaken. When the market's pessimistic, we see the yen strengthen. So today, when we are seeing we're seeing a more optimistic market, we'd expect the yen to weaken, and we can see that's why here we see the weakness in the yen alongside the Swiss franc and the US dollar, because that's what you'd expect in the risk-on markets. So that's something to be aware of. Going through into Wednesday, we have the Bank of Canada Monetary Policy Report. Now, the Bank of Canada, it's all going to be about the forward guidance. The interest rate is expected to remain at 0.25%. That's expected, no change is anticipated. It's all going to be about the statement. How are the Bank of Canada feeling about the Canadian economy? Well, they've got some problems in Canada. But GDP dropped 11.6% in April. Due to the pandemic, we've had oil prices drop. Now, Canada is a huge oil export economy. CAD is a petrocurrency alongside the Russian ruble and the Norwegian krona, and you have the Canadian dollar, petrocurrencies. So the cheap prices in oil has been weighing on the Canadian dollar. Also, Canada's biggest trading partner, next door to them, the US, they are struggling with a huge spike in COVID-19 cases. So all is not well for the Canadian dollar, which is why you've seen the Canadian dollar appreciate the least in the risk-on tones compared to the New Zealand dollar and the Australian dollar. So all about the forward projection, how the Bank of Canada are feeling. I wouldn't be surprised to see some weakness out of the Canadian dollar come Wednesday. So that's something to be aware of. Look at the rate statement. If you want to read the rate statements, just look it up on the website. You can just go to the Bank of Canada website and you can see the statement there. Thursday, employment. Employment is going to be very important for the Australia. Now, the reason for the importance in employment is the Reserve Bank of Australia have said that they're looking very carefully at employment. They will want to see a big spike in employment higher. So the last couple of readings for the Aussie dollar have been pretty poor for employment. See if I can just, yeah, I've got it here. I'll just give you this chart here. You can see here, this is the chart. You've seen that the last couple of reports have been poor. There's been 2 months in a row of huge amounts of jobs losses. So some of those lost jobs are expected to have been returned to the market in June. So if this disappoints the market, if that return doesn't materialize, then that will weigh on the Australian dollar. So look out for that. And obviously you're trading the Australian dollar in line with risk tone. When risk is on, you'd expect Australian strength. When risk is off, you expect Australian weakness. So if you've got a disappointment in the Australian employment data and risk tones were off, expect heavy Australian dollar selling, and you pair it with something like the Japanese yen. That would be the most sensible pairing. Also, GDP coming out of China on Thursday. Again, very important. The big issue here is about the second wave of infections. We're seeing a second wave of infections across the world, but will they hinder the economic recovery? That's what the market's been flip-flopping around, for the last 2 or 3 weeks. Which narrative will win out? Economic recovery or second wave of COVID-19 infections? China's GDP will be eyed very carefully to see some early indication of how the recovery is going. Okay, so the forecast is for a rise in GDP to 2.2%. That will be a very, it's a strong reading showing that there's some positive territory after it's shrunk by minus 6.8% in the last quarter. So just taking a look at the chart here, you can see that there has been that large shrink expected to return to expansionary territory. If it disappoints, this data has the potential to change risk sentiment. So look for the Chinese yuan on Thursday. If it's a disappointment, if it's below 2.2%, I'm not sure what the maximum expectations are. Let me just have a little look on. So it's Thursday. What date was that? Thursday the 16th. Right, so we go to Thursday 16th. Let's see what's going on. Okay, GDP year on year. So the minimum expectation is minus 3.1%. If we get a reading below minus 3.1%, then expect risk sentiment to turn off and see heavy Australian dollar selling. If we get a maximum expect 3.5, anything but above 3.5% will be a positive surprise for the market and will boost sentiment likely on. Obviously, it depends what else is going on, but this event in itself has the potential to change risk sentiment. So be aware of that come Thursday. Now, we also have the ECB main refinancing rate on the same day. So just taking a look at the ECB rate, no change expected, 0.00%, minimum and maximum, no change expected. Again, this is all going to be, there's nothing really expected here on Thursday. So if there is a big surprise, it does have the potential to move the euro. Now let me explain. The PEP program, the Pandemic Emergency Program, has been expanded at the last rate meeting by 600 billion euros. So it's not expected to be expanded again. But at the same time as this meeting, we have another meeting that's due on the Friday and Saturday of this week. That's the European Summit, where they will discuss the upcoming Economic Recovery Fund. Now, if that fund is accepted by all of the European EU nations, expect that to be supportive for the euro-US dollar. So looking at the euro-US dollar pair, what we're seeing here, if we just zoom out, go on to the daily charts, get a bit of perspective, we can see again this large trend line, descending trend line on the daily chart, just seeing some resistance found here as prices moved up into that level. So there's the potential for this to really move a lot going into this week, the euro. If the recovery fund is accepted, expect markets to break above that trend line and buyers on a retest of the descending trend line. So that's something to look out for come the weekend. So be aware, don't hold the euro over the weekend. The European Summit is meeting on Saturday, so that has potential. If the European Recovery Fund is rejected, there's 5 countries who are against it: Austria, Denmark, Sweden, Netherlands, and Finland. If we see any indication that any of those countries, because just one can veto the whole fund, then expect euro-US dollar selling. And obviously, this is a great place to limit risk because we have this big trend line and risk can just be placed above the trend line there. So that's something to be aware of on the euro-US dollar pair. Going back to the charts, to the expected. Retail sales out for the US, that will be viewed carefully to see if the US consumer has got back into gear. Again, I'm not expecting such great figures this month. US COVID-19 cases have been increasing again, sadly. They had record numbers over the weekend, so that's why we're expecting slightly worse data than the previous month. So again, looking at the scheduled calendar chart, you can see that the anticipated 7 days. There we go. Let's keep us moving. Here we go. Let's find our retail sales. Here we go. Retail sales. So expected to come in at 5% month on month for June increase. And maximum expectations are 9, minimum 1.5%. Anything below 1.5% could change risk sentiment. US, largest economy in the world, drives the world really, the US. So if we get a lower than 5% retail sales increase, anything below 1.5%, we'd expect to see Japanese yen, Swiss franc strength, Australian dollar, New Zealand dollar, Canadian dollar weakness. So this is a scenario you might expect to see. A good pair to trade this with would be US dollar CAD. Say we got some a data point worse than 1.5%, US dollar CAD longs would look like a sensible currency pair to trade that with on the Thursday. Now, going back to scheduled events, we have Governor Bailey speaking on Friday, so just bear that in mind as well with everything we've already mentioned about Monday's data points. So that are the main data points to be aware of. They're the scheduled ones. Here's some of the unscheduled ones. A couple of things to show you. Okay, earnings season's ahead. That can change risk. Already mentioned what to look out for. Pay attention to earnings seasons. Look out for it when it's referred to. Rising Brexit risk. The stakes are getting increasingly higher with Brexit, and less progress seems to be made all the time if that was possible. So real sense of the urgency in the UK increasing for the rising Brexit risk. There's a China versus West narrative is rising, sadly. So we're seeing, particularly with Huawei, a number of countries wanting not to have Huawei as part of their telecommunications infrastructure. And there's a number of countries that are starting to say it's possible that their citizens will be more vulnerable to arbitrary arrest in China. So we've seen Australia's government say that. We've seen the US governments say that. We also had a number of countries in the West rejecting the Hong Kong legislation. The Hong Kong's meant to be, is it one country, two systems, or two, you know, two countries, one system. The Hong Kong legislation has been highly controversial and has created a lot more tension between China and the West. Look out for this. If we see more tariffs raised on China, if we see more deals being broken or less optimism, that can change risk sentiment itself. European Recovery Fund, very important this week. Look out for it. Remember, the committee will be meeting over the weekend. Big euro risk ahead in the weekend. Be aware of that. And second wave COVID-19 fears. This was a Spanish flu from 1918. The second wave, which came, 4 or 5 months after the first wave, was 5 times more deadly than the first wave. Now, at the moment, thankfully in the US, deaths are actually decreasing, but cases are rising. And the problem with the rising cases, it means people will go out, go out less, they'll spend less. So keep your eye out for this COVID-19 fears. At the moment, the market is essentially pricing in a vaccine by the end of this year or the start of next year, and a successful treatment. The lower the death rate becomes, the better that is really, and the market will keep balancing these second wave COVID-19 fears. Still has the potential to move the market a lot, change risk sentiment day to day, moment by moment. So something to be aware of that's unscheduled, but can be market moving. So there's plenty going on this week. Don't forget the special offers we have here at HYCM, that if you would like some individual coaching with myself, I can really help you get in tune with the market and show you how to be reading this risk sentiment day to day. Don't forget we have these offers that are available. If you'd like to take up one of these offers, please contact support or contact me directly on my email there, giles.cockling@hycm.com. These prices here are not payments you pay, it's just deposits that you make to the company, and the company will give you these benefits of spending time with me, allowing me to coach you, and this helps pay for my time with the deposits that are made, and the trading obviously comes as a result of that. So do be aware and don't forget to contact me if you would like to take up any of those offers. Thank you very much, everybody, for attending. It's been great. And yeah, Shua, China sanctions to the US, that's something to look out for. That can alter risk. So keep your eyes open on any further escalation of Chinese sanctions on the US, or US sanctions on China. I know President Trump was saying that the phase 2 trade deal was essentially dead. So that doesn't bode well. It's tariffs you need to look at. Tariffs and sanctions, as they become more and more significant, they have a greater ability to hinder risk. Oh yeah, I'll type my email, sure. There's my email, just type that out there, Mohammed. Euro New Zealand dollar, let's take a quick look at Euro New Zealand dollar. So let's just go back to the screen. Yeah, here we see Euro New Zealand dollar. Well, at the moment, the euro is supported on the positive risk tones, because risk is on. We're seeing dollar weakness, Euro US dollar higher. We're having the euro moving higher. We also have weakness for the New Zealand dollar at the moment because of the fact that ANZ, the big investment bank in New Zealand, has said that the RBNZ is going to become concerned about the strength of the New Zealand dollar. So at the moment, I would favour Euro New Zealand dollar upside. So for today's session only, a return to 1.7191, you would expect to see buyers with stops running above the ADR low for the day. Just looking at the chart technically, any other, obviously we're in a longer term downtrend, so we'd expect that trend line to be significant. So do look at that, a trend line above. That would be obviously a key resistance point overhead. And let's see what else we can see technically on this chart. Yeah, that's the major things that we have on that. But fundamentally, I would have a Euro New Zealand dollar upside bias intraday for today's session, but that would only be for today's session. Any returns that 1.7200 handle, just above that pivot point, you'd expect to find buyers. Yeah, you're welcome. No, you're very welcome, guys. Don't forget, and for HYCM clients, we have an actual webinar on Wednesdays at 12:30 GMT, and we ask questions. I show you the dominant currency sentiment for the day. I show you how to recognize the dominant currency sentiments, how to choose currency pairs for yourself. So please do turn up on Wednesday. It's only for HYCM clients. So if you're not an HYCM client, could I suggest you become one, and then you can benefit from this webinar, and you can benefit from my knowledge, and I can pass that on to you, and we have questions and answers. Yeah, sure. The way you join on Wednesday is contact support or send me an email. Shua, I'll just type it in again. It should be just there. And you become an HYCM client. And yeah, any problems, email me. Otherwise, email support and just let them know about the offers that we have here, and I can get a good offer for you. Hope that helps, guys. Okay, that's super. Well, thank you very much, everybody, for your time. It's been lovely to be here. Good to see some new faces, as well as some great old faces as well, who come to the webinar on Wednesday. So thank you very much, everybody, and I hope you have a very good afternoon. Thank you now. Goodbye.